Good afternoon and welcome to your weekly FX options report. Today is Wednesday, November 24, 2010. In midweek trade, the major U.S. stock averages are rallying by over 1%. Ahead of the Thanksgiving Day holiday here in the U.S., better than expected jobless claims figures and an improvement in consumer sentiment lifted equities. Starting out with a look at initial jobless claims, Labor Department reported that claims for the latest week fell by 34,000 to 407,000. That level is the lowest since July of 2008. Continuing claims on the 4-week average also fell. Meanwhile, the University of Michigan's Consumer Sentiment Index for the month of November came in at 71.6, the highest seen since June. And in other economic data releases, personal income rose by 0.5% in October, while consumer spending rose by 0.4%. Now, core inflation hit a record low of 0.9%. And in terms of economic data releases out from the U.S. that came in on the downside, durable goods orders fell to its lowest level in nearly 2 years, down by 3.3%. And new home sales fell by 8.1% to 238,000. Over in the spot FX market, the U.S. dollar is trading mixed against the major currencies, higher against the Japanese yen. And although the dollar has paired earlier session losses against the euro currency, it is still trading slightly lower. Now, the euro did strengthen after sliding below the 133 level in midweek trade. Over in the Eurozone, sovereign debt concerns continue to be in the spotlight. Now, earlier this week, Ireland did accept financial aid from the EU and IMF. And on Wednesday, Ireland's government revealed a 4-year, $20 billion plan in terms of spending cuts and taxes. Now, Eurozone economic data releases did improve to the upside, especially in Germany, where the IFO spiked higher than expected to 109.3 from October's upwardly rise 107.7. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And on to our daily trend opinion for the major FX option pairs. Let's take a look at the AUX, the U.S. currency against the Australian dollar. Now, for that pair, the key short-term resistance stands at 107.25. The RSI is mixed with a bearish bias. And the preference of trading central analysts for that pair is short positions below the pivot, which is currently at 107.25, with targets currently standing at 98.25 and 93.50 in extension. For the BPX, the U.S. currency against the British pound, that pair is under pressure. Now, it is also approaching its resistance, and the RSI for the BPX is mixed to bearish. Therefore, the preference of trading central analysts for that pair is short positions below the pivot of 64, with targets at 61 and 60 in extension. For the CDD, the U.S. dollar against the Canadian dollar, the downside does prevail. Now, the RSI for the CDD is capped by a bearish trend line, and the preference of trading central analysts is short positions below 105 with targets at 99.50 and 98 in extension. For the EUI, the U.S. currency against the euro, the key short-term resistance currently stands at the 75 level. Now, that pair is posting a rebound right now and stands below its resistance. The preference of trading central analysts for the EUI is short positions below 75 with targets at 72.50 and 69.90 in extension. Moving on to the SFC, the U.S. currency against the Swiss franc, that pair is under pressure. Now, the SFC is currently challenging its new resistance. Therefore, the preference of trading central analysts is short positions below 100 with targets at 97 and 94.25 in extension. And last but not least for this segment, let's take a look at the YUK, the U.S. dollar against the Japanese currency. Now, that pair is currently under pressure. The pair is challenging its new resistance, and the preference of trading central analysts for the YUK short positions below 84.50 with targets coming in at 80.40 and 79.30 in extension. Moving on to our weekly trend opinion, last week we did see that the U.S. currency continued to challenge key levels. Now, that may turn positive in the medium term, and therefore the analysts at Trading Central will keep a close eye on that. Now, in terms of portfolio performance, since its inception in August of 2007, it is unchanged from last week, standing at 1,943.68%. And since the beginning of this year, January 2010, it is up by 663.58%. We do have one trade alert for you here right now, and it is calls on the CDD. Now, that pair is rebounding on its support and shaping a bullish flag. Therefore, a further up move is expected as the pair is breaking above a declining trend line. Other pairs that trading central analysts will be keeping their eyes on this week include the EUI, BPX, and the YUK. Looking ahead to next week, key reversal levels on different pairs will be watched, including the AUX, the NZD, the PZO, and the SKA. Now, starting out with a look at the AUX, the pair is rebounding while its daily RSI is challenging its resistance. Also for the NZD, it is on the upside and it's currently challenging its medium-term declining trend line. For the SKA, it is challenging its resistance at the 75 level, with the RSI is well directed. Last but not least, for the PZO, it has rebounded on its strong support and it's approaching its resistance at 126.50. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. For our viewers here in the U.S., have a safe and happy Thanksgiving Day holiday.